Advanced Audit and Assurance, Chapter 14, Reporting. Contents: 1. The audit report and the meaning of a true and fair view. 2. The Unmodified Audit Report, ISA 700. 3. Audit Reporting and the Companies and Allied Matters Act, 2004. 4. The Modified Audit Reports, ISAs 705 and 706. 5. Other information published with the audited financial statement, ISA 720. 6. The impact on the audit report of opening balances and comparatives, ISAs 510 and 710. 7. The impact of going concern on the audit report, ISA 570. 8. Communicating with those charged with governance, ISA 260. 9. Communicating deficiencies in internal control, ISA 265. 10. Specialized areas. 11. Chapter review. Introduction. Competencies: assessment of risk, internal control, internal financial controls. Identify and assess based on a given business and a given scenario the business, reporting, and compliance risk in the context of an assurance or audit engagement in the public or private sector. Communicate advice or a report based on the assessment above. Evaluation of accounting treatment. Analyze and evaluate, drawing conclusion on the appropriateness of stated accounting treatment in the context of a given business and a given scenario in the public or private sector. In an audit assignment based on international standards on auditing and IFRS. Drawing conclusions and reporting. Analyze, evaluate, and propose how issues identified during the course of an audit or assurance assignment may be raised and dealt with in communication with management, directors, and those charged with governance, including action taken when issues cannot be agreed. Identify, apply, and explain procedures that may be used and considerations relating to the identification of risk issues that may require disclosure. Evaluate and apply quantitative and qualitative judgment based on the results of tests and evidence obtained. Draw conclusions and advise on the capability to report on an assurance engagement or audit engagement, including reporting findings, giving an external audit opinion, or dealing with other issues that may require inclusion in an audit report. Draft extracts of a suitable assurance report or management report based on a given scenario and entity. Draft extract of a suitable audit report or management report based on a given scenario and entity and in accordance with local law and international standards of auditing, of accounting and audit. Evaluate and apply suitable judgment on when it may be appropriate to refer to a specialist in preparing an opinion or report. Evaluate and apply suitable judgment on when it may be appropriate to withdraw an opinion on, or take other such appropriate action on an audit or assurance engagement. Identify and explain the issues that may be relevant and the nature of reports that may be given relating to risk management, internal controls, and governance. Exam context. This chapter is fundamental to students' advanced audit and assurance studies as it relates to the output for which a client pays a fee, that is, the audit or assurance report. Following a revision of the basic structure of an independent auditor's report as encountered in your earlier studies, you will then learn about the various modifications that may be required in the audit report. You will encounter the various ISAs relevant to this final phase of the audit, such as ISAs 510 and 710 on opening balances and prior year comparatives respectively, and of course the early ISA 700 series specifically on audit reports. You also need to be familiar with the nature and content of communication with the client, and in particular with those charged with governance. For completion, the final session briefly addresses special purpose audit reports. By the end of this chapter, students will be able to 1. Audit opening balances and comparatives. 2. Explain the impact of going concern on the audit report as required by ISA 570. 3. Describe in detail the contents of an audit report. 4. Identify when the basic audit report should be modified, and if so, how. 5. Explain the auditor's duties with respect to other information in documents containing audited financial statements as per ISA 720. 6. Discuss which matters should be communicated with those charged with governance and describe the communication process. 7. Briefly describe the form, content, and use of specialized audit reports. Subtopic 1. The audit report and the meaning of a true and fair view. Section Overview. The audit report. The meaning of a true and fair view. Section 1.1. The audit report. The auditor's report on the financial statement is the only direct communication between the auditor and the owners of the company, to whom the auditor normally reports. In the past, the auditor's report was criticized for being too brief to allow the general reader to understand the nature of an audit and the meaning of the auditor's report. This was seen to be a major cause of the expectation gap. The problem that users of financial statements expect more from the audit than statutory and other regulations require. The expectation gap. The term expectation gap refers to the fact that the public perception of the role and responsibility of the external auditor is different from his statutory role and responsibilities. The expectations of the public are often set at a level higher than that at which the external auditor actually operates. Some examples of the misunderstandings inherent in the public's expectation are as follows. 1. The public believes that the audit opinion in the audit report amounts to a certificate that the financial statements are correct and can be relied upon for all decision-making purposes, including decisions about takeovers. 2. The public also believes that the auditor has a duty to prevent and detect fraud, and that this is a purpose of the audit. 3. The public assumes that in carrying out his audit work, the auditor tests 100% of the transactions undertaken during the accounting period. One consequence of these misunderstandings has been an increasing tendency in some countries to undertake legal action against the auditors, sometimes on a frivolous basis, in the belief that the auditor should have prevented misstatement in the financial statement or should have prevented fraud. Responses to the expectation gap. Responses to the problem of the expectation gap have varied between countries. In some countries, corporate governance codes have been corporate governance codes have been changed to strengthen the role and responsibilities of directors for sound internal control and accounting systems. The auditor's report is addressed to the owners of the company, not to other users of the financial statement. In the context of auditor liability, some countries such as the UK allow the auditor to include an additional paragraph in the audit report after the opinion paragraph, disclaiming any liability that may arise from the use of the report by persons other than those to whom it is addressed. However, this currently is not the case in Nigeria. Electronic reporting. Many companies now publish their annual reports on their websites. This method of electronic reporting has implications for the auditor. It is considered good practice for the auditor to check that the electronic form of the financial statement and auditor's report are identical to the paper copy. Section 1.2. The meaning of a true and fair view. In most countries, auditors performing an audit in accordance with statutory requirements are required to produce a report that makes reference to whether the financial statement gives a true and fair view. In some countries, the audit report is required to give an opinion whether the financial statement presents fairly in all material respects. The terms true and fair view and fair presentation have an equivalent meaning. The meaning of the term a true and fair view has not been rigorously defined either by law or by the auditing profession. Many legal authorities and writers on the auditing have developed their own definition of the term. The main points to note are as follows. 1. Assessing whether financial information is true and fair is more an art than a science. The assessment relies heavily on judgment of the auditors. 2. It is appropriate to think of true and fair as a combined phrase. Do not try to define true and fair as separate concepts. 3. True and fair will normally imply compliance with any relevant legislation and accounting standards, the use of accurate figures or best possible estimates, meaningful presentation and disclosure of information, the avoidance of bias, distortion, and manipulation of figures, no concealment of material information. Subtopic 2. The Unmodified Audit Report, ISA 700. Section Overview. Definition of an unmodified audit report. Reaching the audit opinion. Basic elements of the audit report. Audit reports prescribed by law or regulation. Audits conducted in accordance with both ISAs and local auditing standards. Unaudited supplementary information presented within the audited financial statement. Section 2.1. Definition of an unmodified audit report. An unmodified audit report is an audit report containing an audit opinion not modified in any way by a qualified opinion and containing no other modifications or additional paragraphs such as might be added by an emphasis of matter or other matters paragraph. These are discussed in a later section. An unmodified opinion should be expressed when the auditor concludes that the financial statements have been prepared in accordance with the identified financial reporting framework, including the requirements of applicable laws, and give a true and fair view. An unmodified opinion provides a high level of assurance that a professional, independent examination of the financial statement has not revealed any actual or possible material misstatement in those financial statements. The general format of the report is regulated by the revised ISA 700, forming an opinion and reporting on financial statements. However, the precise wording of an audit report may be varied at the discretion of the auditor. Unlike the original ISA 700, the revised ISA 700 does not deal with modifications to audit reports. Modified reports are the subject of ISA 705, modifications to the opinion in the independent auditor's report, and by ISA 706, emphasis of Matza paragraphs and other Matza paragraphs in the independent auditor's report. Both of these ISAs are described later. Section 2.2. Reaching the audit opinion. In reaching his audit opinion, the auditor is required to evaluate whether he has obtained sufficient appropriate audit evidence as to whether the financial statements are free from material misstatements. Uncorrected misstatements are material individually or in aggregate. The financial statements give a true and fair view. The financial statements have been prepared in accordance with the relevant financial reporting framework, and in particular, whether the financial statements adequately describe the relevant financial reporting framework. The financial statements adequately disclose the entity's significant accounting policies. The significant accounting policies are appropriate and consistent with the relevant financial reporting framework. Accounting estimates are reasonable. The information in the financial statement is relevant, reliable, comparable, and understandable. The financial statements provide adequate disclosures. The terminology used in the financial statement is appropriate. Section 2.3. Basic elements of the audit report. The basic elements of an unmodified auditor's report, as given in ISA 700, are as follows: 1. Title. 2. Addressee. 3. Introductory paragraph. 4. Statement of management's responsibility for the financial statement. 5. Auditor's responsibility. 6. Auditor's report. 6. Auditor's opinion. 7. Other reporting responsibilities. 8. Auditor's signature. 9. Date of the audit report. 10. Auditor's address. These elements are designed to achieve the objectives of ISA 700, which are for the auditor to 1. Form an opinion on the financial statements based on the conclusions drawn from his audit evidence, and 2. Express that opinion clearly through a written report that also describes the basis for that opinion. Title. The auditor's report should have a title that clearly indicates that it is the report of an independent auditor. This is to distinguish this type of auditor's report from other reports that might be issued by other auditors who may not have to abide by the same ethical requirements and requirements for independence as the independent auditor, for example, internal auditors. Addressee. The report should be appropriately addressed as required by national law and the circumstances of the engagement. The report is usually addressed to either 1. The shareholders of the entity whose financial statements are being audited, or 2. The board of directors of the entity. Introductory paragraph. The introductory paragraph in the report should identify the entity whose financial statements have been audited, State that the financial statements have been audited. Identify the title of each statement that makes up the complete set of financial statements, that is, income statement or statement of comprehensive income, statement of financial position, and so on. Refer to the summary of significant accounting policies and other explanatory information. Specify the date or period covered by each statement. Director's responsibility for the financial statement. This section of the report should describe the responsibilities of those responsible for the preparation and presentation of the financial statement. It should include an explanation that the directors are responsible for 1. The preparation of the financial statement in accordance with the applicable financial reporting framework, and 2. For such internal controls as deemed necessary to enable the preparation of financial statements which are free from material misstatement. Auditor's responsibility. This section of the report states that the responsibility of the auditor is to express an opinion on the financial statement based on his audit. The audit was conducted in accordance with ISAs for Nigerian standards on auditing if NSA 28 is being followed rather than ISA 700, explaining that those standards require the auditor to comply with ethical requirements and plan and perform the audit to obtain reasonable assurance about whether the financial statements are free from material misstatements. The latter gives the reader of the report assurance that the audit has been carried out in accordance with established standards and practices. This section also describes the scope of the audit. It refers to the auditor's ability to perform the audit procedures which he deemed necessary in the circumstances. Any restriction on the scope of the audit can lead to a modified audit report, which is explained later. This section also describes an audit by stating that an audit involves performing procedures to obtain audit evidence about the amounts and disclosures in the financial statements. The procedures selected depend on the auditor's judgment, including his assessment of the risk of material misstatement of the financial statement. As part of this assessment, the auditor considers relevant internal controls. He does not consider internal controls for the purpose of expressing an opinion on their effectiveness. An audit also includes evaluating the appropriateness of the accounting policies used, the reasonableness of accounting estimates made by management, and the presentation of the overall financial statement. This part of the unmodified report should end with a statement that the auditor believes that the audit evidence he has obtained is sufficient and appropriate to provide a basis for his opinion. Auditor's opinion. When the financial statements have been prepared in accordance with a fair presentation framework, an unmodified opinion should be expressed when the auditor concludes that the financial statements give a true and fair view or are presented fairly in all material respects in accordance with the applicable financial reporting framework. When the financial statement has been prepared in accordance with a compliance framework, an unmodified opinion should be expressed when the auditor concludes that the financial statements have been prepared in all material respects in accordance with the applicable financial reporting framework. This can lead to a twofold opinion. For example, in the UK, an opinion will be expressed on whether the financial statement gives a true and fair view or presents fairly and have been properly prepared in accordance with the Companies Act 2006. That's for UK. Where IFRSs are not used in where IFRSs are not used as the financial reporting framework, the reference to the financial reporting framework in the wordings of the opinion should identify the jurisdiction of the financial reporting framework. In Nigeria, the opinion will be expressed as a minimum on whether the financial statements present fairly in all material respects the financial position, financial performance, and cash flows. 2. Have been properly prepared in accordance with the Financial Reporting Councils of Nigeria Act No. 6, 2011 and the Companies and Allied Matters Act Cap C20 LFN 2004. For some types of companies, e.g., banks in Nigeria, there may be additional reporting requirements such as compliance with Banks and Other Financial Institutions Act, BOFIA of Nigeria, or reporting in compliance with IFRS for listed companies. Other reporting responsibilities. In some countries, the auditor may have additional reporting responsibilities. For example, it may be required by local legislation to report certain matters if they come to his attention during the course of the audit, or it may be required to report on specific matters such as the adequacy of accounting records. Such other reporting responsibilities should be addressed in a separate section of the report following the opinion paragraph subtitled Report on Other Legal and Regulatory Requirements. In Nigeria, auditors must report other reporting responsibilities as detailed in the 6th schedule of the Companies and Allied Matters Act of 2004, namely, whether they have obtained all the information and explanation which to the best of their knowledge and belief were necessary for the purpose of their audit. Whether in their opinion, proper books of accounts have been kept by the company so far as appears from their examination of those books, and proper returns adequate for the purpose of their audit have been received from branches not visited by them, and whether the company's balance sheet and profit and loss accounts dealt with by the report are in agreement with the books of accounts and returns. Auditor's signature. The report should be signed in the name of the accounting firm or in the personal name of the auditor, or both. The report is usually signed in the name of the firm because the firm assumes responsibility for the audit. In some countries such as the UK, the report has to be signed by the senior statutory auditor, the engagement partner, for and on behalf of the firm. In Nigeria, the report must be signed by the engagement partner for and on behalf of the firm. Date of the auditor's report. The report should be dated no earlier than the date on which the auditor has obtained sufficient appropriate evidence on which to base his opinion in the financial statement. This will not be earlier than the date on which the financial statements are signed or approved by the directors or management of the client company. The date of the report informs the reader that the auditor has considered the effect on the financial statements and on his audit reports of subsequent events which occurred after the reporting period and up to that date. Auditor's address. The report should give a specific location for the auditor. This will usually be the city where the office responsible for the audit is located. An example of an unmodified audit report is set out below. Independent Auditor's Report. Appropriate addressee. Report on the financial statement. We have audited the accompanying financial statement of ABC Company, which comprise the statement of financial position as at December 31st, 20XX, and the statement of comprehensive income, statement of changes in equity, and statement of cash flow for the year then ended, and a summary of significant accounting policies and other explanatory information. Management responsibility for the financial statement. Management is responsible for the preparation and fair presentation of these financial statements in accordance with international financial reporting standards, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. Auditor's responsibility. Our responsibility is to express an opinion on this financial statement based on our audit. We conducted our audit in accordance with international standards on auditing. Those standards require that we comply with ethical requirements and plan and perform the audit to obtain reasonable assurance about whether the financial statements are free from material misstatements. An audit involves performing procedures to obtain audit evidence about the amounts and disclosures in the financial statements. The procedures selected depend on the auditor's judgment, including the assessment of the risk of material misstatement of the financial statement, whether due to fraud or error. In making those risk assessments, the auditor considers internal control relevant to the entity's preparation and fair presentation of the financial statement in order to design audit procedures that are appropriate in these circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. An audit also includes evaluating the appropriateness of accounting policies used and the reasonableness of accounting estimates made by management, as well as evaluating the overall presentation of the financial statement. We believe that the audit evidence that we have obtained is sufficient and appropriate to provide a basis for our audit opinion. In our opinion, the financial statements give a true and fair view or present fairly in all material respects of the financial position of ABC Company as of December 31st, 20XX, and of its financial performance and its cash flow for the year then ended in accordance with international financial reporting standards. Reports on other legal and regulatory requirements. Form and content of this section of the report will vary depending on the nature of the auditor's other reporting responsibilities. See Section 3 below for additional statements required by CAMA 2004 for audits in Nigeria. Auditor's signature, date of the report, auditor's address. Section 2.4. Audit reports prescribed by law or regulation. If the auditor is required by law or regulation to use a specific layout or wordings of the audit report rather than the wording in ISA 700, then the audit report may only refer to ISAs if it includes as a minimum the following elements: 1. Title. 2. Addressee. 3. An introductory paragraph identifying the financial statement audited. 4. A description of management's responsibility for the preparation of the financial statement. 5. A description of the auditor's responsibility to express an opinion on the financial statement and the scope of the audit. This should include a reference to ISAs and local accounting and local auditing standards, and a description of an audit in accordance with those standards. 6. An opinion paragraph containing an expression of opinion on the financial statement and a reference to the applicable financial reporting framework used. 7. Auditor's signature. 8. Date of the report. 9. Auditor's address. These headings correspond with those specified by ISA. But in doing so may have also complied with pure ISAs. This will be the case in Nigeria, where NSAs are based on the pure ISAs. In this case, the audit report may refer to ISAs in addition to the national auditing standards, but only where 1. There is no conflict between the national auditing standards and ISAs, which would have led the auditors to form a different opinion or not to include an emphasis of Matza paragraph that would have been required by ISAs. And 2. If the report follows the wording of national auditing standard, it includes as a minimum the elements as specified above. When the report refers to both national auditing standards and ISAs, it should clearly identify the jurisdiction of origin of the national standard. Note that if there is conflict between the national auditing standards that an auditor is required to comply with and ISAs, then the conflict must be resolved in favor of the national auditing standards. Section 2.6. Unaudited supplementary information presented with the audited financial statements. The reports and accounts issued by a company often contain supplementary information that is not covered by the auditor's report. The reports and accounts issued by a company often contain supplementary information that is not covered by the auditor's opinion, such as a chairman's statement, employment reports, or business review. The auditor should be satisfied that any unaudited supplementary information that is presented together with the audited financial statement is clearly differentiated from the audited financial statement. This is because unaudited items are not covered by the auditor's opinion. If the auditor concludes that the unaudited information is not clearly differentiated, then he should ask management to change how that information is presented. If management refuses to do so, then the auditor should explain in his report that the supplementary information has not been audited. The auditor's responsibilities in respect of unaudited supplementary information are covered by ISA 720. See section 5 below. Subtopic 3. Auditing. Subtopic 3. Audit reporting and the Companies and Allied Matters Act 2004. Section Overview. Reporting requirements of the Companies and Allied Matters Act 2004. Reports to the Audit Committee. Section 3.1. Reporting requirements of the Companies and Allied Matters Act 2004. Section 359. The auditor of a company shall make a report to its members on the accounts examined by them, and on every balance sheet and profit and loss account, and on all group financial statements, copies of which are to be laid before the company in a general meeting during the auditor's tenure of office. The auditor's report shall state the matters set out in the 6th schedule as follows. 6th schedule, 2004, matters to be expressly stated in the auditor's report. 1. whether they have obtained all the information and explanation which, to the best of their knowledge and belief, were necessary for the purpose of their audit. 2. Whether, in their opinion, proper books of accounts have been kept by the company so far as appears from their examination of those books, and proper returns adequate for the purpose of their audit have been received from branches not visited by them. 3. Whether the company's balance sheet and profit and loss accounts dealt with by the report are in agreement with the books of accounts and returns. 4. Whether, in their opinion and to the best of their information and according to the explanation given them, the said statement give the information required by this act in the manner so required and give a true and fair view. In the case of the balance sheet of the state of the company's affairs as at the end of its year, and in the case of the profit and loss account of the profit and loss for its year, or as the case may be, give a true and fair view thereof, subject to the non-disclosure of any matters which by virtue of Part 1 of the second schedule of the Act are not required to be disclosed. 5. In the case of a holding company submitting group financial statements, whether, in their opinion, the group financial statements have been properly prepared in accordance with the provision of this Act, so as to give a true and fair view of the state of affairs and profit or loss of the company and its subsidiaries and associates. Section 3.2. Report to the Audit Committee. CAMA 2004 requires that, in addition to the report to the members, the auditor shall, in the case of a public company, also make a report to the Audit Committee. The form and nature of this report remains somewhat discretionary, as CAMA 2004 does not prescribe the content or scope of the required report. The form and content of the report should be agreed when agreeing the terms of the engagement and confirmed in the engagement letter. It may be argued that formally satisfying the requirements of ISA 260, communication with those charged with governance, and ISA 265, communicating deficiencies in internal control to those charged with governance and management, would satisfy the requirements of CAMA 2004 to report to the Audit Committee. Subtopic 4. The Modified Audit Reports, ISAs 705 and 706. Section Overview. The nature of a modified audit report. Emphasis of matter paragraphs and other matters paragraph, ISA 706. Emphasis of matter paragraphs. Other matter paragraphs. The modified opinion, ISA 705. Form and content of a modified opinion. Examples of modified opinion. Deciding to give a modified opinion. Audit reports and the exam. Section 4.1. The nature of a modified audit report. Before issuing a modified report, the auditor should discuss with management the reason for the modification. The reason should be explained, and the auditor should ask the client entity's management to amend the financial statement. If management make the necessary adjustments, the auditor will not need to issue a modified report. If management refuse to make the amendment, a modified report may be the only course of action available to the auditor. An audit report is said to be modified where either A matter arises which does not affect the opinion given by the auditor, but which gives rise to an emphasis of matter paragraph or an other matter paragraph in the audit report covered by ISA 706. A matter arises which does affect the opinion issued on the financial statement. This will give rise to a qualified opinion, a disclaimer of opinion, or an adverse opinion covered by ISA 705. A modified audit report can therefore either have an unmodified audit opinion or a modified audit opinion. Section 4.2. Emphasis of matter paragraphs and other matter paragraph, ISA 706. As discussed above, an audit report may be modified to include an emphasis of matter paragraph and or an other matter paragraph. These types of paragraph are the subject of ISA 706, emphasis of matter paragraphs and other matter paragraphs in the independent auditor's report. The purpose of these paragraphs is to provide additional communication in the audit report when the auditor wishes to draw the attention of users to a particular matter in the financial statement. They do not modify the audit opinion. An emphasis of matter paragraph draws the attention of users to an item or matter that is included in a financial statement and which the auditor considers fundamental to an understanding of the financial statement. An other matter paragraph deals with a matter which is not included in financial statement but which is relevant to an understanding of the audit, the auditor's responsibilities, or the audit report. Section 4.3. Emphasis of matter paragraph. An emphasis of matter paragraph is used to draw the reader's attention to the matter presented or disclosed in the financial statement, which is fundamental to an understanding of those financial statements. When an audit report contains an emphasis of matter paragraph, the opinion is not modified. It can therefore only be used where the auditor has obtained sufficient appropriate audit evidence. That is, the matter is not materially misstated in the financial statement. If the matter is materially misstated, a modified opinion is required. When the auditor includes an emphasis of matter paragraph in the audit report, the auditor is required to include it immediately after the opinion paragraph. Use the heading emphasis of matter for the paragraph or another appropriate heading. Include a clear reference to the matter being emphasized and to where relevant disclosures that fully describe the matter can be found in the financial statement. Indicates that his opinion is not modified in respect of the matter being emphasized. Circumstances in which an emphasis of matter paragraph may be necessary. ISA 706 gives the following example of circumstances in which an emphasis of matter paragraph may be necessary. 1. When there is an uncertainty relating to the future outcome of exceptional litigation or regulatory action. 2. Where the entity has adopted a new IFRS early and that has had a pervasive effect on the financial statements. 3. To draw attention to a major catastrophe that has had or continues to have a significant effect on the entity's financial position. Example, emphasis of matter paragraph. The following illustrative wording is given in ISA 706. Emphasis of matter. We draw attention to Note X to the financial statement, which describes the uncertainty related to the outcome of the lawsuit filed against the company by XYZ Company. Our opinion is not qualified in respect of this matter. ISAs requiring emphasis of matter paragraphs. There are currently 2 ISAs which require the auditor to use an emphasis of matter paragraph in certain circumstances. ISA 560, subsequent events, requires an emphasis of matter paragraph to be used in 2 specific circumstances. These were set out in Chapter 9 and relate to the circumstances when a subsequent audit report is issued relating to subsequent events. ISA 570, going concern, requires an emphasis of matter paragraph to be used to highlight the existence of a material uncertainty relating to a going concern problem. The following illustrative wordings for this type of emphasis of matter paragraph is from ISA 570. Note that this is only appropriate where the issues relating to the going concern of the entity are not such that a modified audit report should be given. Such matters are considered later in this chapter. Emphasis of matter. Without qualifying our opinion, we draw attention to Note X to the financial statement, which indicates that the company incurred a net loss of -Naira during the year ended 31 December 20XX, and as of that date, the company's current liability exceeded its total asset by -Naira. These conditions, along with other matters as set forth in Note X, indicate the existence of a material uncertainty which may cast significant doubt about the company's ability to continue as a going concern.